before that, Jay Bala from Cashthechoes.com is with us on the show. Jay, hi, afternoon, season's greetings to you. Just looking at the price action in the markets. Last week on Wednesday, we had that, big sell-off, but it just turned out to be a one-day wobble, not very material. And after that, Thursday, Friday, and today, markets have been consolidating, moving up with a positive bias. What's the setup looking from here on?
Yeah, thanks for the wishes, Rima, and wishes to you and all the people at CNBC-TV18. See, as long as the markets remain above the December 13th low for the Nifty and December 12th low for the Bank Nifty, I think the trend is still up. The trouble starts only if the markets were to start trading below those levels. But we are watchful for a formation of a top. It's just a watch and an alert. It's not a preemption, and you should not get negative about it. But we are just watchful, so you got to exercise a bit of caution. So that's the point here. So the setup is such that we are probably on the last stretch of the move that started from the middle of this year, and there is a possibility of a likely top. As I said, likely it's a probability. We just need market to confirm that. Until that point, assume the market is still going up.
Okay, and just for the benefit of our viewers, 13th of December, the Nifty had hit a low of 20,769. So that would be the marker on the way down.
No, absolutely. Jay, and what about other indices? I mean, what is looking, you said you used the word top. What else is looking toppish according to you?
Since the middle of this year, I've been bullish on capital goods and realty and autos, and all these indices are pending further higher highs, but all of them have lost momentum considerably. But so the watchfulness that one needs to exercise at this point of time is that if the next higher high were to get registered and the markets were to reject it, that will be a bearish sign. And we'll combine that with the breakdown of significant support levels. And the level Rima has pointed out, 2769, that's perfect. And on the Bank Nifty, it's 26886. So, if these support levels were to give and also combined with the rejection of the next new high, that will be bearish setup for the markets. So the vulnerabilities of the leading indices are already starting to look a little bit vulnerable and fatigued, but we don't have a reversal yet.
Jay, hi, good afternoon. So some more trading strategies, what would the advice be? Volumes are a little thin. First of all, would you initiate anything for the next 2-3 days, or would you wait for the turn of the year? Basically, some trades perhaps that one can work with.
Yeah, so it'll be like what we had identified in the middle of November, the all-time highs and new highs for the global indices as well as the Indian indices. That's played out as per expectation, and I think that is still continuing, and a little bit more is pending. So we'll play strong stock which haven't lost momentum. So something like Bharti, that's still the recent early December high it doesn't look like a complete move. So bullish on it against the risk level of 940, maybe even 960 is okay, but 940 is quite conservative. Probably expecting somewhere about 1100 plus for Bharti. And there are a couple of negative setups. One is Oracle Financials, another one is Polycab. Both are thinly traded, but watch out for Oracle Financials against the risk level of 4,400. It's probably setting up to drop to about 3,400. Be very conscious. Both these names are thinly traded, Oracle Financials and Polycab. So be very careful if you're trying to short here.
Okay. Any shorting opportunities where you've seen a confirmed top and there is a reversal in the offing?
See, we don't have a confirmed top in most of the indices, and even these stocks a couple of stocks that I mentioned, Oracle Financials and Polycab, they're all corrective plays, not deep reversals. These are short-term setups. So autos, they are the key here. They're probably going to clock fresh 52-week highs, and Nifty Pharma Index, that's also at fresh 52-week highs. But all these indices that I like, they have started to lose momentum, and we'll be watchful for price rejection from those levels. Then we'll get more aggressively bearish. But until that point, we remain bullish on the market.
Jay, we've got some very interesting moves on global asset classes as well, right? I mean, the US 10-year is now trading below 4%. The dollar has slipped to just about 101.5. I mean, it's a 5-month low on the DXY as well. What do you make of these bigger trends, and how would you correlate them with what your next Nifty levels might be, the targets that you may be working with?
Yeah, it's too early to project Nifty targets, but I know where it could happen, but it's be too early to talk about it. But so for the moment we'll avoid. But the setup in the global markets is that, if you recall, in November when the US 10-year yields hit 488, I said I'm no longer bearish on the 10-year bonds, and the markets went to 5.02 or 502 bips, and then turned around from there. If you go and look back at my prepared notes, I have pointed out to a correction to about 390 bips, and the markets have started slightly below it. There is a significant support for the US 10-year yields at about 380 to 360 bips. So I think there is a surprise reversal for the markets, bond markets in January. So and the dollar index could clock another low, but it could be above 99, and that could also turn around and sit with the US bond.
Jay, thank you very much for joining in.